Morning, everybody. It's Friday, April 12th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets had May corn up 1.5 pennies at 4.30 1/4. May soybeans are up 2 3/4 at 11.62, and May Chicago wheat was up 1/4 at 5.52. This morning, USDA was out with an export sales announcement: 124,000 metric tons of soybeans for unknown destinations for the 23-24 crop year. Good morning, guys. It's Friday. Finally, we've gotten through a week of reports. We had USDA out yesterday as well as Conab. I'm sure we'll talk a little bit about that later in the show. Dustin, I was going to go over to you. Firstly, we were talking sort of about some of these spreads in the soybean complex and a little bit just in terms of market makeup there. And I know you had a few thoughts to get us rolling here this morning.
Yeah, definitely. Thanks, Dan. So I had a question from a customer. I think a very valid question about, the ratio change after the March 28th reports. So the ratio hasn't really dropped as much as one might expect with such a surprisingly friendly report for corn and a bearish report for beans. It did drop. It went from like 2.56 down to 2.48, but it continues to hover around 2.50. And again, this ratio is November 24 beans divided by Dec 24 corn. We generally see anything above a 2.5 at this time of year more favorable toward, beans economically, especially when flat price is low, and any ratio that's, sub 2.2, 2.15 is more economically favorable for corn and corn. So here's the question for the group kind of is, corn spreads are extremely wide. Bean spreads are still inverted, whether you're looking at July Nov or Nov. There is still a tightness associated to beans on both flat price, as we're seeing in the ratio, and in the spread market. Does that have any impact on how the funds are positioning? Does that make them more reluctant to be short beans because they're not actually getting that dividend to be short that market? And I think, Justin had some good points on this. Maybe you can kind of elaborate too on what we were talking about beforehand, Justin.
Yeah, my opinion, if you look at like May, so obviously May, July is at a carry, the nearby contracts, 12 3/4, 2 cents off the low. So we're not, it was, a few months ago, 6, 7 over. So all these spreads, if you look at, the nearby versus November, for example, May versus November, it was $1 inverse on November 14th. Today it's, yesterday made contract lows at 5 under. So it's been a steady decrease. It's coming from, I think it's the hangover from the tight levels, right? So, filling pipelines, South America fully coming on board, Argentina coming back online. We still had record crush, I think, is just part of that. Part of that just, demand that we've been, handling for, better part of 12, 18 months, and all the new crush facilities. So I think you've been getting really strong demand and, fighting kind of rebuilding the pipelines, in my opinion. So if you look at the spreads, they've done nothing but go down. They're not nearly as wide as, corn or wheat, for example. But I think if you look at it, it's hard to argue that the spreads haven't widened substantially. July Nov made contract lows yesterday. Novs, Nov 24, 25s basing on contract lows. So yes, definitely stronger, and not, the huge incentive that corn or wheat has to, as far as like a dividend paying short, like we've been talking about. But I think that, is that just a lag from this, kind of global tightness that we had 12 months ago? And now, obviously South America's been harvesting, been taking a lot of our export business. So I think it just takes time for that. But I definitely understand the question as far as like a paper short, hedge fund type grower. Obviously, they've been willing to be short. They're big short here, have been kind of stubborn to cover. Even if you look at the products, those have just continued to fail too. You might get one where oil seems like it's really strong, or even a really strong veg oil market, and then within days it falls apart. There's a carry in soybean oil now. There's a carry and meal. So, is that just a residual? Obviously the Argentine drought was a big thing for crush globally. Really disrupted the whole crush trade, and we've been seeing record after record for I don't know how long now, but kind of blown away the records at the same time that we've built all these new crush facilities. So maybe demand's also just so strong with all these new plants online. I've seen domestic basis is up pretty good. The average bean basis since harvest, up probably 30 to 40 cents. So maybe just our monthly crush rate is high enough at this stage, and margins are still decent enough where if you just spend $1 billion building some of these new facilities, you're probably going to crush beans, right? No matter what the price. So, if farmers sold a lot off the combine, maybe basis is strengthened enough that it doesn't justify such wide spreads.
Yeah, I was just thinking about this as we're talking too, because it would make sense to me that July Nove is kind of supported still. It has come way off of its high, like you mentioned, but still inverted, and it could be we're still looking at a 300 to 350 million bushel carryout thereabouts. It's not ultra abundant at that number. It could easily fall below 300 if we got a little extra export sales through the summer. Any sort of logistical problem in Brazil, trucker strike, could lead to a lot of that business back where July Nove goes back inverted again to a large degree, just because we don't have a lot to give. But to your point, though, this increasing crush is really a increasing over time as well. So when you look at like Nove inverted, that's really interesting to me. I know a lot of the market just tends to follow volume, and maybe that's part of it. But if you're thinking longer term, okay, well, if you're worried about inflation adjusted plays and you're hedging Nove 24, maybe there's some ownership strategies off of Nove 25 that we should be looking at, just surrounding like the inflation trade, because that's really where all that demand is stacked, is into the late part of the 24 season and into 25.
Yeah, no, I agree. And one of the tough parts, and just from a trader's perspective, I feel like, when there's abundance, a lot more confident being bear spread corn, just because it feels like you have way more supply behind you, via the farmer, versus beans, it's kind of a widow maker. Whenever you're bear spread July Nove or Nove, it's almost 1-for-1 with futures when it turns. So it's a really painful trade to have on, where corn and wheat, some of these ones that they just seem to be more reluctant ralliers of spreads, when the market turns. So that can be part of it too. It's one of the favorite trades for spec longs is to buy bean spreads, because they're super volatile. Like you said, I mean, if you were to go from a 340 to 240, I mean, that might be a $1 move in spread. Where corn, if you were to move, from a 3 billion to a 2.6, it's probably still widens. So, that could be part of it too. Just the risk of that spread being anything is tough to be short.
And just kind of state it plainly, like the reason for that risk is we have a new bean crop, large bean crop every 6 months, right, from the two hemispheres, and our demand is 50% exports, and these contracts are geared for export. So it makes sense, definitely. And I think, yeah.
Well, we've seen this, Dustin, too. We've seen where we've had good supplies, but we've seen huge inverses even in the Nove contract, where like Nove July gets inverted $1 because there's so much hedge pressure on the July contract or May and July contract from South America. So it is kind of and you do have that somewhat with the safrinha crop in Brazil, but it's actually more aligned with our calendar year a little bit, because it's so much later than beans. So it's kind of more of a competitor to U.S. corn, like early harvest, so you get a lot more of that pressure. It seems like August, Sep, versus beans like in the March through July timeframe. So you do have different seasonalities on, those two giant crops like you talked about, where beans is really 6 months apart, corn's really like 3 or 2. So you almost have all the sell pressure on, in that time frame for corn, where beans is more, kind of spread out.
Yeah, good point.
Yeah, definitely interesting.
So you guys referenced South America quite a bit in this discussion, and I think we'd be remiss if we didn't bring up yesterday's report. I mean, we still have quite a big discrepancy between Conab and the USDA, and I think it's depending on which side you sit on. I mean, the USDA it appeared yesterday just unwilling to make an adjustment, and certainly in their estimates, and so what gives here? I mean, we're talking 400 million bushels between corn and beans. Justin, I mean, I obviously none of us know completely, but what's your outside opinion on just that spread there between Conab?
Yeah, I mean, you're closer to 700 or 800 million bushels, all crops combined.
Good point.
Pretty massive. It's by far the biggest discrepancy we've had in probably since I've been around. Part of that's because the crops have gotten so much bigger, but just the total bushels is massive. Again, does it matter? The market should be, smart enough to figure out if we start doing, the basis levels improve and, all those, we start doing more business. Problem being, and we talked about this yesterday, we probably have enough either way. It's just a matter of what price that is that, we need to be at. So, yeah. It's certainly hard, unless Safrina really just, they just had some good rains, unless the spigot completely turns off, we're probably going to have, plenty of competition from them, to deal with. But, obviously 20 million ton difference, from the high to the low end of estimates is a massive deal when it comes to global trade. So the market, obviously, corn feels horrible. It feels heavy. We've talked about this. It tries to make good trades. It just feels like it's still, a hangover from too many unpriced bushels over the market.
Yeah.
Whether that's, U.S. and South America, maybe we got some these good rains in Safrina. I'm sure you're getting some good Brazilian hedging too. More confidence there to hedge. That's, their primary goal is selling their crops. So they, they don't have nearly as much storage or, they don't like to store as much as the U.S. farmer does. So they generally, try to price it and move it. So the currency, I think, is another interesting thing. I mean, dollar's on fire. They've gotten a huge currency windfall too, with this latest dollar move. So their prices are relatively stronger versus ours on this last dollar move. So with good rains and a flat price rally and a currency bump, I'm sure you're attracting decent selling there.
That's good. Thanks for that. Thanks for that, Justin. Like I said, it was kind of a hot button issue last night through the socials and everything, and a lot of USDA bashing after this report, as you can imagine. Right, let's put a bow on the week for cattle here, buddy. What do you got?
Yeah, a little bit of cash trade yesterday in cattle, 293, 294-ish, generally about $2 lower on the dress side of things, 2 to 4 lower on the dress. So it was really kind of the bigger down that we'd kind of heard about lately, 182 to 185 in the south. So, I think we are trying to hold some kind of level of support here. I think, there's some interesting things going on in the beef right now. The choice select spread is at a very narrow point. It's only like a $3 difference right now between the choice and select cuts, whereas at this time last year it was closer to 20, 25, so I think that's something to keep an eye on, that we're kind of getting even select prices to this really high level. So it just seems like everybody's kind of looking for a deal in beef right now, and it doesn't seem to matter too much than just paying for whatever's cheaper. So I think that's kind of a bad sign longer term, and especially as we kind of get into the seasonal with meat demand really ramping up in the grilling season. So I think that's something to keep an eye on. Wouldn't be surprised to see both of them kind of rise seasonally, but at some point that spread, I think, is it seems really out of line. So I think it's just something to keep in mind. I don't know exactly what's going to move first, but obviously choice is likely to still keep the premium. It just, you could see a big correction, I think, in select, and market may see that as, if choice starts to go, I think the market's going to see that as pretty negative overall. But on the hog side of things, we kind of stabilized a little bit yesterday going into the end of this week. We had the big down here in kind of the middle of the week, held 10-day support. Cash started at a little bit of a grind lower here past couple days. So I think that's just kind of why the market really backed off, really got, the RSI was super high. So I think you got some technical pressure too. So just going into the end of the week, kind of looks like we're trying to hold stable to some degree.
Very good. Appreciate that. We, guys, we did have a question come in here real quick before we wrap. With inflation being up, the Dow's down. Is there any legislation moving through Congress that could affect farmers before the next election? Let's see.
I'll have to call my lobbyist.
Well, I mean, I think you get some, I'd say probably on the renewable side is probably would affect farmers pretty directly. You got the SAF stuff. I mean, that we've talked about a number of times in the show, but outside of that, I'm not real privy to other farm bill issues that are being discussed in Congress, unless you guys got any 2 cents to put in on that.
Yeah, no, I would say the biggest things that I see are certainly, what happens with aviation fuel, what happens with some of these E15 battlegrounds that are happening, what happens with the carbon programs. There's some, 2-year programs that, I know a lot of the big ethanol plants and big players are trying to figure out, how that distills down to the farmer. We've had several conversations about that. A lot of money flowing around that space and a lot of disagreement on, how it should work. I'll still argue that one of the biggest net benefits to farmers would be if we close the loopholes. There's way too much foreign feedstocks coming in for these biofuel programs that we're incentivizing and subsidizing as taxpayers. So a ton of money that's trying to do the right thing, and I think kind of being undercut by some of these, which seem to be like easy things to kind of cut off. But biodiesel for sure, bringing in used fats and oils from China and other places overseas, not having import tariffs on Brazilian ethanol. All those sorts of things are, unfortunately incentivizing, competition too. We're pumping money into a system that, helps other countries, with their production as well. So as far as that, I think those are definitely the biggest things to see how that, aviation fuel, for example, would be a major boost, depending on how all those things play out. I know there's been huge ramp ups in some of these big modern facilities in Illinois and other places. So, depending on how that all plays out with individual states, do you see a state like, Illinois, that has some big refinery capacity start adopting some California type, policies? All those types of things will be super important to farmers here, in my opinion.
Oh, perfect. Thanks. Michael, thanks for the feedback there and the questions. We always appreciate that. Today's Friday. We finally have Brian Williams back with us here. So we'll get a little fun fact Friday here before we call it a week here.
Thanks, Dan. And
Can't wait.
Hello, friends. It's Masters Week. Friday fun fact for the Masters here. Really quick. Bought the land. Bobby Jones and Clifford Roberts bought the land, developed it in 32. It opened. The first Masters was 1934, won by Horton Smith. Race Creek, which runs through hole 11 through 13, was named after the former owner, John Ray. It was actually Fort Augusta. His house was furthest from the fort and actually would protect the residents from Indian attacks. So that was kind of interesting to see that. Just trying to find, we could talk about the Masters, interesting facts for hours, but the Masters wasn't played through 43 through 45 due to the World War II, in help to raise some support for the war effort. Cattle and turkey were raised on the Augusta grounds. So
Nice.
that was, I thought Ryland would be right up your
I
alley
appreciate
there
it.
on that
Yeah.
one.
Yeah, Riley, you got this.
Whole new
Yeah.
perspective on the Masters.
Yeah, the green jacket was introduced in 49, won by Sam Snead. And lastly, no one has ever won the par 3 in the Masters in the same year. So that is still ongoing as we speak.
And after Ricky Fowler's round yesterday, I think that statistic is safe.
Yeah, for sure.
He did not play well. So, no, thanks, Brad. It's good stuff.
Yeah, good stuff, Brian.
Officially, it's my favorite week of the year. So, here we go. We got May corn now up 4 1/4, 4.33 1/4. May soybeans are up 8 3/4 now, 11.68. And May Chicago wheat's up 1 1/4, 5.52 3/4. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central. Hope everybody has a great weekend, and we'll talk to you again next week.
Thanks.